People think it's debt. It's convertible debt. It's unsecured, no recourse. What that means, Ron, is that Bitcoin could go from $100,000 to $1,000. The debt's not getting called. There is no recourse. Bitcoin can go to $1. You see, Bitcoin can literally go to 1 penny. The debt doesn't have. There's no call feature, and so it's like basically someone loans you billions of dollars, and you agree that in 5 years you will either pay them back in cash or in stock. But you know what happened is if Bitcoin crashed by 75%, the stock would trade down. We would just pay off the debt with stock. So the risk isn't in the debt so much as it's in the equity. But the point, and people are like, oh, well, that makes the equity more risky. Well, yeah, that's the point.
And there's a quick excerpt from Michael Saylor telling you how the convertible debt offerings work with MicroStrategy and what they have going on. And it doesn't matter if Bitcoin goes down to $100 or goes up to $1 million, they will be good. So let's get into it. We appreciate each and every one of you. Go ahead and smash this like button. If you guys haven't subscribed to the channel, make sure you go ahead and show us some love. And current time it's recording, Bitcoin's coming in at $117,000. What do we see? What do we anticipate? We've showed you this before, talked about this to ad nauseum. Right now, we are still in an uptrend. The RSI is near overbought territory, and we've had a pullback on the RSI. Could we come up and put a higher high in, or could we even come off and cool down a little bit? Yes, both scenarios could play out. This is an inverse head and shoulders pattern. We blast it out. Could we get a back test back down to 110,000, 109,000, potentially wick below? This would be a textbook bump and run pattern before we hit that potential target up to over $150,000. James Lavish is weighing in. And for those that are worrying about the game being over, claiming that Bitcoin is now fully priced, insisting that it can't go much higher from here, well, look at this chart. Right now, you see gold at 22 trillion, art, cars, and collectibles 27 trillion, equities at 135 trillion, real estate 317 trillion, bonds 318 trillion, and money $129 trillion. So let's just do some quick math. If you look at the money, 129 trillion. If Bitcoin captures 1% of that, that's 1.29 trillion. Bonds at 318 trillion, you're at 3.18 trillion plus the 1.29, it takes you up to 4.47. Real estate, you'd be looking at 370 trillion, 1% of that would be 3.7 trillion. That would take Bitcoin up to 8.17 trillion. Equities are at 135 trillion, 1% of that is 1.35. That takes us up to 9.52. Collectibles, you're looking at 27 trillion, so that would be 0.27, with gold being 22 trillion, that'd be 0.22. So where that would take Bitcoin if it got 1% of this overall graph, $10 trillion. Right now we're at 2 trillion, so 5x from now. Could Bitcoin do more than that? Most definitely. This square will keep growing. And look at breaking news. Federal Chair Jerome Powell's firing is imminent. Jerome might be up out of there. And people are saying this is confirmed. Will this happen? This would definitely be good for markets because Jerome wasn't lowering rates. He was going back and forth with Trump. And can the president do this? Technically, yes. So if this happens, markets will rip. And we've showed you this here, this textbook head and shoulders pattern. We're waiting for this to play out to get to that $150,000 threshold. In the meantime, between time, BlackRock continues to buy 3,500 plus Bitcoin. They now hold 720,000 Bitcoin. And then in competition with them, Strategy. They just broke that 600,000 Bitcoin threshold. So just looking at Strategy and IBIT, they've accumulated 720,000. Strategy's at 600,000 Bitcoin. That's 1.3 million plus Bitcoin that's bought from these two separate entities. There's only 21 million. And BlackRock just got the green light way back in January of 24. So it hasn't even been 2 whole years. It's been a year and a half. And they've acquired 700,000. Nothing's stopping this train. MicroStrategy at the close was at 442. We have had a pop outside of this channel, and we have had a race up to $460. Right now we've had a retracement, technical target. We've talked about this macro target up to about over $1,100. People have been sleeping on MicroStrategy, but it could be getting ready to melt faces. But look where the end game is for strategy and some of these other Bitcoin treasuries like Metaplanet. People have been talking about MNAV for quite some time now, but check out this explanation.
I think helps clarify where that's coming from. So how would you describe the NAV multiple and what its reason to be is?
I'll start with there are many companies outside of Bitcoin treasury companies that trade at a multiple to what you might consider their net asset value, right? And if you take a traditional company, a net asset value would be a combination of the assets on its balance sheet and a discount on the sort of earnings projections, right? Like, and so if you're to combine those two things, right? Like, I was just talking to folks at one of the banks that we work with, Morgan Stanley, right? They trade at a multiple. I don't know exactly what it is, but it's 1.5 to 2.5 times their net asset value, right? And so why does a company like Morgan Stanley trade at a multiple net asset value? Well, one, you may believe that the earnings potential is growing at such a rate that whether you look at 1 year, 5 years, or 10 years out, you think the potential is greater than that. You might also believe that they have a distinct competitive advantage, right, in the market that they're in that is not showing up in a cash flow projection. You might also believe that their management team is unique and is strong. And so you take all those combinations and you'll say, look, this is the asset value, but we're going to put a multiple on that of 2-3 times, right? You see that happen, by the way, all the time with high growth tech companies, right? Like you might value them, especially early stage, but middle stage too, at multiples over their asset value, right? You see that happen with a Microsoft when they come upon AI, right? You might build a projection of the revenue and the cash flows from that, and you might say, but you know what? I'm going to value it at even greater than that, right? So this concept of companies being valued greater than their asset value or greater than the discounted cash flow is not an uncommon thing, which is why then people say, hey, maybe I should value high growth companies as just a multiple to revenue, as a multiple to EBITDA. And I think that's a very reasonable thing. And then what do? Rather than take net asset flow value or discounted cash flow, you take an EBITDA multiple and you look at all the peers and you say, everyone's worth 20x. These guys, I'm going to give 30x because I believe them. And you've thrown away, the spreadsheets and the cash flows, and you're saying, let's just take a look at the peer group, right? And let's say they're in a really hot, sexy industry. They're doing AI and, throw away the cash flows, throw away asset value. I'm just going to take a multiple of EBITDA and I'm going to give them a 50x multiple, right? I'm Palantir. I don't really care what they're doing in their business with AI, and I don't care about what their revenues are. I'm going to trade Palantir at 50x revenue, right? So this is not unique to Bitcoin, first of all, the idea of a multiple to net asset value. And so people call it alchemy. I call it valuation. Right. And every bank and everyone who's been to, business school or studied corporate finance realizes that there's a time when the traditional models don't work. And you have to come up with a different way to value a company. Right. Our belief is a good way to value the company is take the Bitcoin yield, right? And then take the Bitcoin gain, which is a function of Bitcoin yield. It's a dollar gain, right? Like it's sort of like an earnings, right? And take a multiple on that, right? And so we projected, right, that this year, right, our Bitcoin dollar gain is going to be in the $25 billion range. And if we do that and you take a typical EBITDA multiple or an earnings multiple and you say, hey, what's the company worth if they had produced $25 billion in Bitcoin dollar gain? Well, perhaps you'll put a 20x multiple on that. But what if that number is growing 50% a year? Should you put a 30x multiple on it, a 40x multiple? It's not unreasonable. And you would value strategy there then somewhere between, right, $500 million, or sorry, $500 billion and $1 trillion. And then you can go back and say, well, that versus our net asset value of 60, right? Maybe we should be at 10x NAV or 20x NAV, right? So it's not alchemy. This has been happening since the beginning of corporate finance and equity valuations. Is there's got to be a different way of looking at the enterprise value of a company than just looking at a straight, what is the asset value?